How do we invest? To some extent, our investment approach is the natural response to the changing conditions in the investment market over the past few years. Hence, let us have a closer look at the standard solution offered by the market today. Traditional wealth management companies utilize today actively managed investment funds. These traditional investment funds charge up to 3.5% management fees per year. Over 95% of them do not outperform the market yield over the long run. But this would actually be their task. And this is of utmost significance, because today's investors can purchase the market yield for very cheap money via passive investment products such as exchange-traded funds. Even though actively managed funds make up today the lion's share of invested assets across the globe, they are losing market shares to passive and alternative investment funds every day. We keep up with the times and have waived to a large extent traditional actively managed funds from our allocation. We do not sell in-house investment products, and we fully forego retrocession. As such, we are free of any and all conflicts of interest. We invest via indexed products such as exchange-traded funds and in alternative products. Only the best exchange-traded funds end up on our short list, as they must comply with our 9 quality criteria. As a rule, alternative investments account for 20 to 30% of the asset allocation. They improve the estimated return of the overall portfolio and provide the added benefit that they simultaneously reduce risk. Nevertheless, the use of passive and alternative investments is just one out of 4 foundation pillars of our investment approach. The other pillars are our active asset allocation, our core satellite strategy, and our market research. Let us have a closer look. One glance at the historical returns of any stock index shows that the pure buy and hold investor has not generated any return on his stock investments over the past 10 years. Worse yet, if one takes the inflation into account, he has lost money. Hence, we do not content ourselves with the use of passive investment products. We furthermore actively manage the asset allocation and attach high importance to the market timing. We adjust regularly the allocation into different asset categories and currencies in order to address market changes, and we are in the position to implement the investment allocation decisions taken by the investment committee within a few minutes due to our light operational structure. This represents an indispensable advantage in today's volatile world. We do not take our buy and sell decisions based on fundamental forecasts only. We place particular emphasis on technical analysis and the general market mood. 95% of investment success is determined by the correct asset allocation decision, and only 5% of investment success is dependent upon the correct selection of the individual securities. Hence, as far as stocks are concerned, we do not pick individual securities. For the purpose of better diversification and because most equity analysts fail to correctly forecast stock prices, we differentiate between strategic and tactical asset allocation. Our definition of our core investments is the long-term allocation and weighting of the investment categories. These investments are considered to be value investments and provide the portfolio with a solid base return. These investments are held for a longer period of time, and as a rule generate recurring income. They can contain exchange-traded funds on dividend-paying stocks, themes, and low-yield bonds, as well as the money market and certain alternative investment classes. We define our satellite strategy as our short and mid-term investment policy. These satellite investments are managed more actively. These investments are opportunistic, strive to exploit market volatility, and pursue the target to generate positive excess returns compared with core investment. They can contain exchange-traded funds on growth stocks, on high-yield bonds, and commodities. The decision-making foundation for the correct asset allocation is provided by our systematic market research. Because the main source of investment returns lays in the correct anticipation of the different macroeconomic market trends and themes. Every day we are striving to better understand the interrelations in our globalized world by asking the right questions before others do. Tomorrow's investment approach: active management of passive and alternative investments.